Facing a challenging future, what is the way forward for Kenyan banking industry? Good evening. Many thanks for joining us. This is The Trading Bell. My name is O'Brien Kimani. We are coming to you from the trading floor of Nairobi Securities Exchange. And of course, we are here to alert you on how the market has performed. And of course, we also look at the larger economy and help you break down the figures. Later on, I'll be talking to Eric Musau. He's a market analyst at Standard Investment Bank. He will be explaining to us why is the market behaving funny. Well, that is an interview that, of course, you don't want to miss. But for now, we sit down with John Gachora. He's a managing director of NIC Group, and I'll be posing to him this question: what is the way forward for local banks? John,
hello, sir.
Thank you very much for joining us.
Absolutely.
Karibu sana to the Trading Bell.
Asante.
Please.
Thank you.
First of all, I want to find out, I mean, you've been in the banking industry since 1956. Actually 57, right?
59 to be precise.
59 to be precise. Almost 6 decades in the banking industry. That's a long time, and you must be having a tremendous amount of experience. Is this the worst time, would you say, for the banking industry?
Absolutely not. I mean, you know, over that length of time, I'd say we have seen some much tougher times. Bearing in mind as well that we were not always a bank. I mean, NIC started as an installment finance house. You know, that's why we're very big in asset finance, which is our legacy. And actually, we did not convert into a bank until in the 90s. Yeah. So, but I would say even within that period of time that we've been a full-fledged commercial bank, I think we have seen some pretty tough times. I mean, there were times when the banking industry was fully regulated from an interest rate perspective, and there were times when this economy was not doing well at all. So we've seen much worse times. I would say what we are going through is pretty short-term pain for the banking industry. Yes. And
in terms of your operations, I mean, we have seen a trend since the new banking amendment law came into effect. Yes. Whereby almost all banks are downsizing or even right-sizing. Have you been impacted, or are you in the process of doing this?
Look, we were impacted, and as you rightly point out, a number of banks have had to look at their strategy. I think one of the things that this new law called upon the banks to do is to really look at their efficiencies, to really look at their banking models. And I think everybody is going through that process. We have gone through that process, and in fact, last year in November, we announced that we released a number of our employees. We have already gone through the process. For us, we did it quickly. We knew exactly what we needed to change, and the change has already taken place for us.
Yes. The number that we have is that you know, you had to let go of some 32 of your senior managers. Was the number increased later on, or this is the number that has?
That was the number. Actually, what we did, we eliminated 40 positions.
40 positions.
And of those 40 positions, we had 32 people, or what you call bums on the seat, people who were there. So that's why we said the number of actually affected people were 32, but we eliminated 40 positions. That's the only number that we have done.
And somebody may want to find out, I mean, by sending home 32 people, what significant impact will this have on your balance sheet or on your operations, actually?
Look, as I said, it's not a matter of just cost cutting. It's a question of strategy. So what we actually are doing is relooking at our strategy and saying, are there some areas we need to de-emphasize? Are there some areas we need to re-emphasize? Yeah? Are there some new skills that we need to bring into the market for the future? And that's the process we went through. So it's not so much a cost-cutting exercise. And I think when people hear people are being let go, they think a cost-cutting exercise. Actually, for us, it's not necessarily that. It does not mean that we are done with hiring. It just means that our strategy called for perhaps a change in a bit of a direction.
And was this some sort of a knee-jerk reaction, or this was, you know, something that was in the pipeline? Because there's a feeling that you know, a lot of banks in this market, you know, they took some drastic measures after the law was enacted.
Yeah, look, I think one of the strengths of leadership is being able to respond to the prevailing circumstances, yeah? And I think the reason I wouldn't say a knee-jerk reaction, I would say it is a reevaluation of strategy. And I say that bearing in mind that when things change, you have to reevaluate our strategy. I think when we talked about this law as a banking sector, we were quite clear that when it comes on board, a number of things will happen. Everybody has to relook to be a bit leaner, and that was important. Two, we talked about going a lot more digital, yeah, if this happens. Three, to relook at our branch networks and see where, because we all carry certain expenses with no returns. Some branches don't make money. Relook at those as well. And I think that's what the banks are going through, that process of relooking at their strategies. Yeah? How can you operate more efficiently in the new normal? Yes.
And if we were to reflect on the 9-month results that you released in November, we saw your payroll rise by about 2.3% to around, was it 2.2 billion shillings?
It was about 2.2 billion.
2.2 billion shillings. So by sending home or by merging some of the units that you have talked about, how much do you expect this will come down by what margin?
Not a lot. As you observed, I mean, the numbers we sent home were not such a massive number. And as I said, it wasn't necessarily a cost-cutting exercise. So in terms of our savings, we will have some savings. It wouldn't be huge. That's one. Two is, whenever you go through this process, it takes a period of time for you to recover the expenses you incur when you let people go. And we expect that payback to be about a year or so for us. But we don't want to tout the number of, in terms of savings, and I don't think we should really talk about savings. Last year, I mean, if you look at, the results at 9 months, the 2.3% was probably one of the lowest growth in the industry from a staff cost perspective, because we have a very good handle on how we control our staff costs. And that will continue to be our thing, that we have to control our staff costs. Yes.
And when we talk about your loan book, grew or dropped by almost 2 billion shillings in the period. What did we had an impact? Was the low capping, was the interest capping law had an impact on these?
No, you see, those results were up to September. The low capping interest rate came
in August.
It was signed in August, but really took effect for us actually in October. So the results that we announced them would have they would not reflect any effect of this law. I think where you'll start seeing the effect of this law is perhaps not even in Q3 per se. I think you start seeing it now going forward, because it takes time for once somebody applies for a loan to the point of actually drawing on that loan. There's a period of time.
There's a period of time.
There's a period of time, and so is the loans that would have come now after that will start showing those effects.
So are we likely to see the situation becoming worse or improving
in terms of
the growth of your loan book?
Look, I think if you look at the results that were released by the central bank, I think it was in the media, that the growth in private credit is an all-time low at 4.1% as of December. Now, there are a number of reasons for that, because it's not fair to just say the interest rate cap is what's causing it, because actually, if you look throughout the whole of last year, 2016, that number was coming down to end up at 4.1. So there was an economic problem that we must all address. And as well as now we have this law in place. So I think in the medium term, or I should say the short term, I don't expect things to dramatically improve. I expect that in the next, until the election or thereafter, I expect to see a very subdued growth in terms of private credit. Yes.
And you operate in 3 countries, Uganda, Kenya, and Tanzania. But of course, we know that Kenya is your biggest operations.
Yes.
In the long term, or mid-term to long term, are you eyeing any other markets?
In the we think of strategy in terms of obviously the three phases: short-term, medium-term, and long-term. I would be lying to say that in the long term we are not eyeing other countries. Yes, we are. I think it is in our, it has to be absolutely an ambition to grow into a number of other countries. But I think in the short term, that's not on the cards. For us, what we decided during our current strategic cycle was that we need to consolidate our presence in the three countries. And if we look in the last 2 years, we have made additional investments in both Uganda and Tanzania to grow those businesses. Because it's our belief is that we shouldn't be judged by the number of flags that we have. We must be judged by the value of those flags. Yeah? And so for me to sit here and say I've got 5 flags and all of them earning nothing is worth a lot less than saying I've got 2 additional flags beyond Kenya, and by the way, they are sizable. So for us in the short term, our goal will continue to be to invest in those countries.
For 22 years, I mean, you've been in the banking industry.
Yes.
Currently, you're now a tier 2 lender. You had been planning to jump to the tier 1 lender. What are the plans so far?
Look, I think our current strategic cycle actually called for retooling of our balance sheet as opposed to jumping to tier 1. Yeah? So we set particular goals on return on equity. We set particular goals on cost of funds. We set particular goals on net interest margin. And those goals we have met. Yeah? Those goals now have been met. So I think as we work on our next strategic cycle, we will now be looking into that, moving towards the tier 1. But I think so far what we have sort of, you know, the board had mandated us is to say, actually, we must first retool our balance sheet for growth.
As we wrap up, I want to hear from you finally. You are appointed by KDIC, you know, to manage the assets and liabilities of Imperial Bank, which is under receivership.
Yes.
What is the status of this process so far?
Yes, so first I want to correct that we were not appointed to manage.
You were?
We were appointed to advise. Two
advise.
different,
Okay,
two different roles. Where the term is we are consultants as opposed to managing. KDIC remains the manager of what's going on there.
Yeah.
I would say, look, since we were appointed, we have made some good progress, I would say, because, you know, our job, as stated then, was to advise KDIC on strategies one, on the assets, what to do. And I think one area we have been very good at advising KDIC is on what to do with the loan assets. I think we have done a phenomenal job to help with collections, making sure customers know what to do. I think we've done quite well on that. The second job we had was to make disbursements to depositors. One, we have worked with KDIC to advise them when, how, to make those disbursements. And we have made 2 disbursements since we were appointed. And that process is continuing, yeah? Obviously, there were other things that we were supposed to do within that agreement. For example, it is stated that we shall do some due diligence, and if in agreement, we shall then be assuming certain assets and possibly certain liabilities. As you know, O'Brien, there has been a number of court cases, and those have slowed the process, that process significantly. But I think, you know, I think from where we are, the larger part of our mandate has been executed quite well.
And without prejudicing the proceedings in court, from your perspective and from where you sit as an advisor to KDIC, do you think that it makes any business sense to revive this bank and make it continue, or the best thing is to liquidate it? You
know, unfortunately, anything I say will be prejudicing the process in court.
So you prefer that you keep quiet on this?
Absolutely.
John Gachora, thank you very much for joining us here on the Trading Bell.
Thank you, Brian.
We wish you all the best.
It.
Thank you very much. John Gachora, Chief Executive Officer, NIC Bank, joining us here on the Trading Bell to help us understand where NIC Bank is, where it's going, and the challenges that the banking industry is facing. You have heard it from the man. This is the Trading Bell. We are back shortly. for a look of how the Nairobi Securities Exchange performed last week. Eric Musau, he's a market analyst at Standard Investment Bank. He's now joining us here so that he can help us put these figures into perspective and, of course, help us break them down. Thank you very much indeed, Eric. All the four indices of the market, they are up by about 4%. And we have seen banks, especially big banks, releasing their financial results. I want to find out from you, what has been their impact on the market?
I think most of the investors were quite happy with the numbers, slightly better than expected. The impact, especially in the fourth quarter, was expected to be a bit more severe. But what the banks have done also is to have a generous dividend payout, and we saw most of the banks bouncing up on the dividend because you're seeing yields of around 10%, and most investors are quite happy with that payout.
And when you talk about big banks, I mean, we saw Equity Bank, releasing figures that were not expected. And when you look at it, is not featured anywhere. It is not in the top gainers. It is not in the top losers. It is not one of the top movers. A very interesting scenario here.
I think initially the banks had already suffered a lot in terms of the correction. So they might not feature here as much because they had already been punished by investors so much. So a lot of it has just been a modest increase. I think the one probably you're going to see this week is probably Diamond Trust, and that announced just this week. And the numbers, you'll see they've actually performed well. They're also doing an acquisition, Habib Bank. They have common shareholding. But generally, the sector has held up quite well, and over the last 3-4 weeks, the sector has done really well.
And who is supporting these improvements that we are seeing? Is it foreign investors or domestic investors?
So we've been seeing activity mainly from foreign investors, especially beginning of the year. This week, we've seen activity at around 60% foreign investors. So it means local activity has actually been picking up. And so it's still foreign investors, but increasingly local investors are starting to participate.
And talking about domestic investors, we saw today the National Treasury launching the much-awaited M-Akiba platform, whereby small investors can purchase, bonds and bills, through their mobile phones. What impact do you expect this to have on the local market?
So the pilot program involves just 150 million shillings, but I think it's a very important step forward in terms of diversifying the market and providing an alternative solution to investors. Most of the retail investors really cannot afford the challenges of going to open a CDS account from central bank and so forth. So this is really having a mobile platform enables them to make this purchase over the mobile phone, and that's a good first step.
And when we talk about top gainers, top losers, and top movers, who do you expect to see in the top gainers next week?
So we have Safaricom starting. People will start looking at it a lot more keenly, and it's already been moving up. The end ends in March, so results expected in May. So we're going to see a bit of activity there. The bank's still going to continue to feature. Some of the other companies we're expecting the numbers. Kenya Re is about to announce. So again, in terms of the insurance sector, we're going to see a bit of activity there depending on how the numbers come out.
Finally, in the top losers, we had Jubilee Holdings, we had EGAD, Sanlam Kenya, Express Kenya, Centum Investment. Do you expect these scenarios to change, or we expect to see, or who do you expect to see in the next week's program?
So we're waiting for Jubilee numbers, and depending on how the performance is and what dividend they actually declare, that could change. We also have Centum, in terms of how will they perform, what is the expectation of the launch, the Two Rivers, and some of the projects that they're working on. It's not trading at a substantial discount to net asset value, so there's room for that stock to start picking up.
Great. Eric, many thanks for joining us here.
Thank you, it's a pleasure.
Eric Musau is a market analyst at Standard Investment Bank, joining us here to help us break down the figures and, of course, help us understand what they mean for us as investors and, of course, shareholders. This is the Trading Bell. Stay right here.
Real estate investment trusts are really the property market, but now in instruments which essentially are liquid. So it means as an investor you can sell in and out of your property, but this time you have an instrument which is actually listed in the market. And the way you make money from them is really to buy low and sell high. You have different types of instruments. So a D rate involves, in full, is called a development rate. And this is really an instrument which involves development of a property to completion. An income rate is where you get the rental income and it's paid over the year. So all the income substantially is paid to an investor in the instrument. But to make money really is to buy low and sell high.
Man, oh man, a very interesting historical fact about the Nairobi Securities Exchange, bringing us to the end of our program for today. Many thanks for your time. We always welcome your interactions with us. You can always do so through our various communication channels. Our SMS line is 22162. Our Facebook page is The Trading Bell TV Show. Our Twitter handle is @TheTradingBell. My name is O'Brien Kimani, and my Twitter handle is @O'Brien Kimani. We'll welcome your suggestions and, of course, your compliments. And even when investment gets hunky-dory, we always encourage you to send your questions through those various channels. And always remember, the NSC Investment Challenge registration is currently ongoing. For more information, always log on to their website, www.nnc.co.ke. Now I'll take you back to Broadcasting House. Have yourself a good evening.